Hello, my name is Hugh. I'm the president and CEO of Revival Gold. And joining me are John Meyer, our VP Engineering and Development, and Steve Priesmeyer, our VP Exploration. John and Steve are both outstanding professionals in the mining business, and I know that you're going to enjoy hearing from them, Merlin, and about our recent update to the resource at Beartrack-Arnett. Of course, this is our flagship project in the eastern part of Idaho in the western United States. We've grown the resource to now 4 million ounces of gold. We're moving ahead with additional drilling, and we will have a PFS out on the project here by year end.
Hugh, thank you very much for the introduction. John, Steve, very nice to meet you. I look forward to kind of getting into talking to you and getting into the detail of the project. And my goodness, as a team, what progress you've made. Hugh, perhaps as a starter, could you just restate the kind of the headline figures from the resource statement or kind of the latest news release? I know you've just said you've kind of got 4 million ounces in your kind of total resource, but could you just kind of break that down a little bit?
Yeah, for sure. This came out May 16th, so it's just hot off the press. 2.1 million ounces of indicated resource. That's a 56% increase in the indicated resource for Revival Gold. And in the inferred category, a further 1.9 million ounces, almost a 20% increase in the inferred resource. We've also got an underground component to this resource. And by bringing up the cutoff grade, we've now taken that resource grade up by 39%. So big headline number increases for the project. Now,
there's there are so many aspects to the Revival Gold story. You've kind of got these two different resource bases. You've got a plan to develop a heap leach, a kind of an open pit heap leach project. You've got some deep high grade stuff. You've got some mixed. There's lots of different moving parts which take a while for me as the reader to figure out. So I wonder if you can just break things down for me. Can we just focus on the PFS at the moment and what you're studying in that PFS?
Well, yes, we do have a very large resource. It's very tempting to contemplate a bigger project for Beartrack-Arnett with 4 million ounces of gold. But what we've decided to do is focus in on a more manageable first phase of the project. We have existing infrastructure on the site, including a gold processing facility, roads, power to site, solution ponds, all of these things that can be redeployed to begin producing cash flow in this cycle in gold. And so that's what we're doing. And we're moving forward on this PFS. Of course, we've completed a PEA in 2020. And with this updated resource, we now have the foundation to draw a pit that will be a leach only pit. And we'll take advantage of that existing infrastructure to produce somewhere in the order of 70,000 ounces a year of gold. Relatively modest, but for relatively modest amount of capital as well, as we continue to grow in the exploration and build out for that larger mill phase of the project.
Okay, so in that heap leach project, 70,000 ounces per annum. Just looking at my notes, I have to refer to my notes because there's so much data. You've got about am I right in thinking? Is it 290,000 ounces in the 390,000 ounces in the open pit heap leach in the indicated category, with another 100,000 ounces in the inferred category. So you've got about 500,000 ounces, just under 500,000 ounces in your heap leach plan, which you're going to be, that's kind of a 7/7 to 49. So it's more or less kind of a 7-year mine life. Is that roughly what you're going to be studying?
Yeah, I'll ask John to chime in here for a moment, but just the headline here. Our last study on the heap leach phase of the project encompassed about 850,000 ounces. And I think we're going to, when we redo the pit for the heap leach phase of this project, as part of that PFS step, I think we're going to get close to about 1 million ounces. So we're looking at something north of 7 years mine life, plus or minus 70,000 ounces a year of gold. And what's really exciting about this, as I tried to mention earlier, is we are reusing existing infrastructure. So it'll improve on our capital estimates. John, do you want to pick up on any of those themes?
Sure. I think the delta that you're seeing there, Merlin, between the 1 million ounces that Hugh's talking about and the 500,000 that you see in the resource update, the delta really comes from the fact that there's lots of ounces in the middle there that are both leachable ounces and millable ounces. And so when you see the resource that we have now, we optimized, the numbers are optimized on what is the highest block value for a given amount of material. And so there's certainly a lot more material that do fall in that leachable category. So that's where you see the difference between those two numbers.
Okay, thank you. And just on those different approaches, you've got the Beartrack kind of linear feature, and then you've got the Arnett kind of, which has got Haiti off to one side. And there's a split between where those leachable ounces come from. But I noticed that you've got, when you talk about recoveries on the news release that you put out in a few weeks ago, those recoveries of 90% from the acid soluble gold from Beartrack, and yet when it comes to Arnett, it talks about 75% recovery. I just can you explain how you've calculated the gold content? Have you done acid soluble gold content on that shear structure, and have you done a kind of a contained gold on the different geology? And actually, this is going to lead into a question to Steve about what is the difference between the geologies of the two various sections. But perhaps first on the kind of the recoveries and metallurgical, where the material is coming from and how you've worked on that. That'd be really helpful.
I think fundamentally we have both fire assay and cyanide soluble models developed. I think the bottom line, however, is that that Arnett, based on the metallurgical test work, is an oxide. It's very, very low sulfur values in the rock. And the leach work that we've done to date, the lab test work we've done to date, is really focused on comparing the results against fire assay, and our database is stronger when it comes to fire assay, and consequently for the Arnett deposit, it's just we have higher confidence in comparing those leach estimates against the fire assay relative to the cyanide. Beartrack is a different beast, and so we know we have those categories of oxide, transition, and sulfide, and so you really have to look to the cyanide soluble assays in order to predict leachable recoveries. Whereas Arnett, we have more confidence in the fire assay database and as it relates to the metallurgical test.
So Arnett leaches really easily, and therefore you can use the fire assay as a guide, and you can say, right, we're going to get 75% of that. Whereas on Arnett, because on Beartrack, on that the shear structure, because the geology is, or the mineralogy is more complex, you have to start by understanding what the acid soluble gold content is, and then take a kind of a recovery from that, and you use 90% of that basis.
Exactly.
Is that right? Okay, and good. And the grades. So your overall resource grade that you put out is about 1 gram a ton gold. And is it 0.6 grams gold or 0.59 that comes into the heap leach? And is that difference a function of primary geology or the acid soluble factor?
Sure. At Beartrack, the gold occurs in fine-grained sulfides, primarily arsenopyrite and pyrite. It's only oxidized down to a certain level, and below that it's all sulfide. So the gold is fine-grained and only partially liberated in the transitional zone. At Arnett, the oxidation is complete down to the depth that we've drilled so far. So the gold occurs primarily as native gold and iron oxides.
And Merlin, I would just add that one of the things about this team is we've actually taken the step of not only modeling the grade of each block, but also the metallurgy of each block. So there isn't an assumption of a transition zone and some topographical surface that represents an interface. We've got metallurgical data for each block, and that allows us to do more precision and more accuracy and reduced risk in our modeling exercises around recoveries. The other thing I just want to point out, course, this is a historic mine, the largest former producer of gold in the state of Idaho. And so we've got all of that data and that operating experience. And in fact, we've got the general manager who ran the operation back in the 90s. So we have that expertise to really understand how best to optimize the resource at Beartrack. And the satellite deposit at Arnett is, as the guys have explained, oxide, and so much more attractive to us for expansion potential and building on the overall economics of the project as we pursue exploration there. On the other hand, at Beartrack, of course, we've got these high grades, and we've got this phenomenal opportunity in the Joss Zone where we're developing out high-grade underground potential. So they are two different animals, but it's complementary in the sense that we're able to leverage the same infrastructure.
Quick question to you, Hugh, directly. What was the historic recovery when the mine was operating in the 90s?
70%.
Okay, that's it's always a good yardstick to have that in mind.
Our PA was modeled on an average of 60%. So you can get a sense here of the level of conservatism in our approach. Yeah,
great. I will, Hugh, I will get onto the high grade potential in the Joss Zone. I am interested in the kind of the bigger resource, but I'm also I'm still kind of curious about the heap leach operation, and I'm going to come back to John and ask him questions about the process plant. But just on the geology, Steve, you've got a drilling program starting up with some RC holes going into the Arnett area, the targets around Haiti and the other, that kind of northwestern part of the concession areas you're going to be targeting. How is the geology related? Is the gold part of the same system? Did it come up a structure and did it head out to Haiti on some flat-lying geology? What's the spatial or the kind of the relationship between the gold on that main shear zone and the gold almost flat-lying Haiti zone?
Well, that's a good question, and that's something we're still trying to come up with a good answer to. The two deposits are slightly different ages. Arnett's a little bit older than Beartrack, but they seem to have formed in the same structural environment. So Beartrack is the Panther Creek Shear Zone is part of a regional structure with about 90 kilometers of strike, which we call the Coiner Fault. And the Panther Creek Shear Zone is either a jog in that fault or it's a transfer structure, a structure along which the motion was transferred. We have right lateral strike slip movement along that, which is consistent with the regional geology. So we had compression pushing to the northeast. In the Arnett area, or in Haiti, we have a series of structures that are dipping moderately to the southwest, which we interpret to be a reverse fault in that regime where you have compression to the northeast. There's very little outcrop out here, so the structural interpretation is based on few outcrops and geophysics and a certain amount of geological, I'll call it intuition instead of guesswork. But they do appear to fit into the same structural regime, even though the geology of the deposits themselves is quite different.
And so I'm looking at the map in front of me, and I can see the northeast southwest striking, very clear subvertical Panther Creek shear. And then if I look over to the Haiti zone, and I can see, twin long drops, and that's a good name, by the way, Italian mine and Roman's trench. Are those, you're saying that those are somehow, there's structural zones which are kind of shallowly dipping to the southwest. Are they in a preferential, is it a rheological contrast? Are they in some kind of preferential geology to host these kind of thick zones?
The only structure that we have good information for in the third dimension is Haiti. Some of the other targets have had some RC drilling, but that doesn't really help much with structural orientations. All of these targets, the only one that we can see for sure gets moderately to the southwest. There are two trends along here. One is the trend that goes through Roman's Trench up into the Hades zone. That is along the northern margin of the Arnett intrusive complex, which is a number ordination intrusive complex. The other trend is to the south, and that goes through the Italian mine and over towards Twin Long Drops and on up to Shannon Gulch and so forth. We're not sure what's controlling these because there really isn't a rheological contrast or a lithological contrast. For example, all of the mineralization in Haiti occurs in one lithology. It's part of the Arnett intrusive complex. We call it the crowded porphyry. So what's controlling the locations of these structures isn't that quite that cut and dried, or at least not as cut and dried as we'd like it to be.
What are you using as your principal vector for your drilling campaign? You've got, I know you've got some infill drilling to come ahead, but you've in the press release you talk about 7,000 meters of drilling. So presumably there's somewhere between 3,000 and 5,000 meters that's kind of coming into this area. Is that the ballpark?
Yeah, I mean, you can see that some of the target areas on this map have been sort of circled with dashed lines. We're going primarily on the soil geochemistry, but we've also integrated geophysics, some air mag that we did, in addition to some historical geophysics that we reprocessed, and also the rock sampling and mapping. So we're using these in conjunction with all the other data that we have to try to orient the RC drilling to test these areas.
I see you're using ionic leach geochemistry. Is that to kind of pick up some of the deeper signals?
Yeah, we use the equivalent of MMI on this because some of the areas are covered. For example, that Midlands area is covered by younger tertiary rocks. So in order to be able to try to see through that cover, we decided to go with the partial leach.
Okay, yeah, I noticed the till over on your sections of the Arnett area. Some of the till horizons are quite substantial, kind of 100-200 meters.
Yeah, it's not all till. The upper layer is till. Then there are tertiary conglomerates and sandstones and volcanics and so forth in that material. That's a graben over at Beartrack.
And what's your drill budget for the Arnett area?
Yeah, it's approximately $2.5 million across Arnett and approximately $2 million at the Joss area of Beartrack, roughly.
Oh, okay. Sorry, I was thinking in meters, but I can.
Meters is roughly 2,000 meters at Joss, and the balance on the Arnett project, with about 3,000 of that being core, and about 3,000 of that being RC. Okay.
Is RC going to work well in this area? I mean, I just a question. I don't know. If you've got oxide gold, yeah, I guess you'll be checking it with the diamond core, but that's something you're going to have to be careful of, isn't it?
Yeah, there are 220 RC holes at Arnett.
Oh, okay.
We use that for prospecting. We don't use that for resource estimation because there is a lot of data. And with this RC drilling, we're using this primarily for prospecting. And when we find areas that are interesting to us, we'll go back in with core drilling in the next drilling campaign and test some of those areas.
Your top targets?
The RC drilling will start later in the summer. We've got to wait for the snow to melt up there and the roads to dry out. We're starting at Beartrack this week.
Okay. We still got snow.
Well, it's mostly gone, but in the trees there's a bit of snow left, and it takes the road a long time to dry out.
Yeah.
But we'll be good by the end of June.
Yeah. Just to orientate you here, this is the 5.6 kilometers of strike in the main Beartrack trend that Steve pointed out earlier. Mm-hmm. And the area that we've been focusing for resource development is here in the Joss area. I'll let Steve speak to the next slide or two, but just to narrow in a little bit on why we're going right back into Joss. That's where, of course, the end of last year we intersected some 12 grams over 14 meters and another 9 grams over 12 meters right here with drill hole 240. And the deposit, which is shown in the block model in gold shading here, is still open. I mean, it's open to the south, it's open to the at depth. In fact, it's open across this whole 5.6 kilometers of strike. And we're just drill constrained. Steve,
Can you go back to that slide for just a second? I just want to point out the continuity of the mineralization along that 5+ kilometers of strike. Since I've been working on the project and we started up at the same time in 2017, every hole that we've drilled that's intersected the Panther Creek shear zone is intersected mineralization. There are some areas where the grade is lower and the structure is narrower, as you would expect, but every hole has been mineralized, and you can see that in the block model here. I think that's important to understand.
Yeah, really impressive. You've also, I don't know if it's on this slide deck, but you've also got the way that the resource evolves over the last 4 or 5 years, from 2018 to 2020 to 2022. Showing how the resource has grown as you completed the drilling and kind of filled out that drill spacing. Hugh, I mean, this is I guess one for you and one for John, really. There we go. That's the image. That's a great image. That's a big growth in resources over 4 years.
And Merlin, I really do want to toot Steve Priesmeyer's horn here, because as he pointed out, Steve was involved in putting this land position together in the first place. Dates right back to the first governor of the state of Idaho. It's fascinating, and there's been over 5 million ounces of gold produced or discovered in this location, and yet so few people really had known about it. And we've put it on the map as an orogenic gold system, one of those big, pervasive gold systems that underpin a number of the world's largest gold projects, producing mines. And the discovery rate on this project over the last 4 years is running $5 an ounce, less than $5 an ounce. And it's not because drilling costs are cheaper in the United States. In fact, they are very expensive in the United States, and we're using core, and we're using PQ core. So it's not that. It's that this team is working efficiently, and this deposit is, as Steve's trying to point out earlier, very giving. Chapeau,
Steve. Good work, and that picture in itself just tells a fantastic story. I guess the question for Hugh, really, and the board is, you've got this big resource, and I think I spoke about this the first time I spoke to you. It's what do you do? How do you skin this particular cat? Because 1 million ounces in a heap leach project is a good target. If you can produce 70,000 ounces at a decent margin for 10 years, that's a good result. But that requires a focus and an energy and a budget. And if you're going to try and define an underground resource, because that's effectively what that orogenic gold system would be, you want to make sure that you've got the high grade drilled out, you've got the drill density in there and tight enough so that you can be confident about a high grade. It's kind of 3 grams a ton at the moment, but you'll be chasing the high grade shoots. You're going to be wanting to build up the tons of the high grade material quicker than you do of the lower grade material. So that's a drill intensive approach, and that's a different strategy. Almost kind of Hugh, what's is that an ongoing discussion that you're getting all the time at the board level?
Well, I'll tell you what it is. It's a have your cake and eat it too kind of moment. And it's very rare in the mining industry where you get this opportunity for a modest amount of capital to put something into production, and then to have a second, third, maybe fourth phase of growth that's in your pipeline. We've got a built-in pipeline of opportunity to deliver value for our shareholders. Now, the mining industry over the last 20 years has made a hell of a lot of mistakes in tackling a big project on a one-step basis. And John can elaborate on some of his experience with the likes of Barrick and others, developing out a concept that is a one-step process to build a large mine. And maybe if we were capitalized as some of our larger peers, we would take that approach. But I think the industry's learned something. And I think we're going to take a page from the Australians, who take a more pragmatic approach and say, let's get that first phase going. And we'll use that expertise and the cash flow that's generated from that first phase to develop ongoing phases. And what's sort of coming back to your question, what's so great about this project, and it's really one of the things that brought us to this project, of all the places we could have gone in the world. Why here? Because we've got this infrastructure we can leverage. We've got this first phase that we can put into production. Our PA capital is a modest 100 million. And even if it grows as a result of inflationary pressures over the last couple of years, we're not talking about any large items. There's no big port to build. There's no power line to construct. And that gives us a relatively low risk opportunity to produce free cash flow, an estimated $50 million a year of free cash flow at $1,750 gold, from a market cap currently of something in the order of 40-ish million.
40 US, yeah.
So this is an opportunity for us. Now, that's not to say that there isn't a lot of folks who are looking at us as an interesting 4 million ounce potential, 150,000 ounce a year, 20-year mine life opportunity. There are, and we certainly entertain their interest. But our focus is on trying to manage the dilution in our share structure, currently only 86 million shares outstanding, and continue to show value in that larger opportunity. And we can come to show you some of that program, but it doesn't necessarily involve drilling out a defined, proven, and probable reserve. What it means is showing the potential for that, and we'll continue to do that. Yeah,
great. Hugh, thank you. That helps a lot. John, I've got a couple of questions for you. The ADR plant. Can you just, for the viewers, just remind people what the process is in a heap leach operation? You know, what happens to the rocks once it's been mined? Where does it go, and what happens to it?
Sure. So after the material is hauled, it's hauled to a crusher, a cone crusher, and there'll be 2 stages of crushing, and we'll crush to somewhere around 1.5 inch to 2 inch diameter, and then we'll stack the crushed ore on a heap leach pad. It's a synthetic lined pad, and we'll irrigate that ore with a dilute cyanide solution. We'll collect what starts off as obviously a barren solution. We'll collect the pregnant solution, and then from there it reports to the ADR plant. There is an existing ADR plant there. We're expecting that our throughput would be very similar to the previous operation, which was they operated on the order of 12 to 15,000 metric tons per day, and that's what the existing ADR plant is sized for. That plant is going to need some upgrades. Of course, the building and much of the infrastructure is there. Some of the equipment within that, particularly refinery related equipment, has been taken out and sold. But the capex is modest relative to what the assets are we have there. The ponds are all still there, both from the pregnant solution perspective and stormwater management. All of those things are real assets because they take a long time to develop. In construction, those things, especially the overall water management systems, that's the first thing you do when you try to get on site, is get going well, and roads and power. Well, those things are all already there. So those assets are also capital risk reduction components. So we really benefit from that. One kind of sleeper there. There's also an existing water treatment plant there that operates. We have Meridian Beartrack has an active NPDES or a discharge permit. They know the treatment technology in order to meet that discharge, and that system is active. And those are all assets for us moving forward because they relate to permitting, they relate to construction, they relate to all those the entire package. So
John, thank you. When one looks at the bigger picture of kind of 1 million ounces that potentially could report to the leach pads, the majority of that's going to come from Beartrack, and the 1/4, 1/3, or whatever the number is going to come from Arnett, which Steve was telling us earlier is much more amenable to cyanide leaching. So the question I'm just wondering, I'm just curious about is, have you thought about doing some agglomeration, some pre-treatment on the Beartrack resource? Because effectively, at some point when you get to 700,000 ounces, at some point there's going to be a metallurgical catalyst to switch from the heap leach to the mill. There's going to be a decision point that you're going to have to make. It's going to be more cost effective to spend a bit more money to get the recovery on the tons. And just the question is, I've got for you is, have you done any pre-treatment work, or are you thinking of doing pre-treatment work? I know sodium leach or chloride leach or whatever it is on the Beartrack mixed oxide sulfide transition material that would enable you to expand or extend your heap leach mine life.
I just want to jump in here, Merlin. You're highlighting a very top of mind topic for us, because of course the mill recovers or the heap leach recovers 60-70% of the gold in situ in place, and the mill recovers 95% of the gold. Now the thing about this is, though, that no matter what we do in terms of a first phase project, down the road when we build a mill, we can still recover that other 20-30% of the gold by reprocessing that material through a mill. And so the gold isn't lost. It's just in inventory for a while until we get a mill constructed. And again, that's one of the benefits of this two-phase approach. But sorry, coming back to your question, and John can answer it more succinctly, but it's a very interesting trade-off. And because we could take a shorter mine life in heap leach and then roll right into a smaller mill. So maybe there's a plan, a phase 1B where we've got a smaller mill and we're processing higher grade sulfides and some of the transition material. Over to you, John. I know that this is top of mind for you, and this is one of the reasons why we're so fortunate to have John. And again, just to toot John's horn for a second, this is a guy who's worked 30 years in the business across some of the largest, most complex gold projects in the world, including for Barrick and Kinross and others, and is very familiar with this question and this kind of problem and optimizing it.
Well, I'm going to chip in before you speak, John, just to say that there's been so much change in reagents and kind of the understanding of how heap leaches work and kind of pre-treatments in the last 30 years, so that the recoveries from 30 years ago may not represent what you can potentially get going forward. So I just having interjected, John, over to you. Sorry for the interruption.
Oh, you've hit on a topic that certainly we're thinking about. It's taking a lot of time to think about it because there's real value left in the rock that we've leached, but clearly getting off the ground with a leach is advantageous for us. And then you're right, there's going to be a transition where we want to move to a recovery method that really realizes the value in the rock. And so, yeah, Hugh's right. We would, but that said, you've got to be careful. You don't want to be trying to reprocess material that you've already gotten 80 or 90% recovery out of. You want to segregate the material that's reporting into the heap so that you're smart about knowing where that unlocked value is that you didn't take advantage of. But the nice thing about a lot of the refractory recovery methods that we're looking at, there's nothing that we did in the heap leach as in crush, grind, leach, that ultimately we don't benefit from when you then process those materials via refractory methods. And why that is, well, if you took away the refractory or the leachable piece, then what's left truly is refractory. And our metallurgical information tells us that material floats very well, and we achieve good concentration levels with refractory methods. And those good concentration levels are very important for every refractory method, whether it's POX or Albion or Biox or potentially others. And then we're dealing with a much smaller amount of material to deal with when it comes to that subsequent processing. And you get to a place where maybe leaching the tails, which some operations do, well, we've already leached it, so we don't really need to do that. So again, we benefit from that. And does that fit into a smaller, high-grade underground operation to reprocess some of those leached material? Well, we think it does. And so there's a right fit and a right scale for that future operation.
Thank you. That's really interesting. And have you looked at a pre-treatment to before the heap to tackle that component of the gold, which is, let's kind of in inverted commas, harder to reach or refractory?
Well, in terms of pre-treatment, if you're referring to kind of a sulfide leach approach, something like Chesapeake is doing as an example,
Mm-hmm.
We haven't started any test work on that side of things. It's not to say that we're not keeping that on the table, but we haven't started any test work. That is a little different beast. I'm pretty familiar with what they're trying to do there and what they've been trying to do at other operations like this.
John, what about looking at different crush sizes for the heap leach, or is there any advantage in terms of additions to the material before it goes on the heap? But I think,
I mean, in terms of the crush size, I don't think we get a lot of benefit going much beyond about 1.5 inches. It's just not. We don't see it really meaningfully improved leach recoveries, which is good, to be honest, because it is coarse. It takes away a percolation issue. The finer you have to go, it creates problems. I don't think we've seen that we would benefit or need to agglomerate. That's an additional cost as well that we don't see that we benefit from. So if you're talking about a pretreatment that would further oxidize the sulfides, that's not something we've started to test yet. It is potentially an option. The challenge with that, Merlin, is that if you try to oxidize a leach, you unlock not only the gold, but you unlock a lot of other things along the way that you got to be very mindful of, and that's So you got to be cautious about trying to oxidize.
John, thank you. You've answered the question perfectly. I was wondering about that kind of stuff, but you've hinted at the arsenic in the ore, the pre-treatment approaches, the fact that it's still kind of untested in the gold sector, and Chesapeake are kind of trying to do that. I've seen it working quite well in the copper sector, but probably without the same mix of elements in the ore or in the mineral, in the rock assemblage. No, that's great. Thank you. I'm feeling really up to date. I'm feeling kind of quite a lot clearer about the approach and the project, that you've managed to educate me much more in 40 minutes than I knew about before, which is great. Hugh, perhaps could you just talk me through the kind of the rest of the year in terms of news flow, and what are the kind of the key milestones that you'll be looking to give to the market? And then I've got a few other questions, a few more questions for you.
Okay, well, I can't help but show you this slide, which is the block model in the Joss area at Beartrack, and that's where we're drilling, starting up here pretty soon. We'll have a release out on the start of drilling in the Joss area. You can see in the magenta the 5 gram plus blocks here. Steve, maybe you could just quickly explain why we're so excited about the potential here at depth.
Well, obviously you can see that there's a large concentration of, excuse me, of plus 5 gram material there, and it's open at depth and it's going to continue at depth. We've right now got mineralization over 750 meters vertically within the system. And the mineralization is either vertical or plunging gently to the high grades are plunging either vertical or plunging gently to the south. So we're going to take that approach and drill vertically right below hole 240, which you can see there on the right, and then step off to the south to try to pick that up. But if you go back and look at that other slide for just a moment, something that I think is important to recognize here, which is that there are, in the areas where we don't have mineralization shown on here, it's not because there's no mineralization. It's because of lack of drilling. And we have no reason to believe that if we were to drill in those areas, we wouldn't fill those areas in. And that's really quite encouraging.
Sorry, in the sections you showed that the high grade was kind of cut off, and in the long section in the block model there was a very kind of clear linear top to the 5 gram block. But presumably above that, that's unmineralized.
No, the mineralization continues up to that erosional surface, which that's the eastern margin of the graben I mentioned before, and that structure is, well, it's pretty steep, pretty close to vertical. You can see the distance between the projected contact between the overburden and the yellow jacket, which is the YY, and the drill hole. And all of that is going to be mineralized. It's just, we just don't have any drill holes in there. If you go back and look at the longitudinal section, you'll see that all of the 3 drill holes that are down south are all in approximately the same orientation, the same elevation. So if we were to step up and drill above those, we would expect to get mineralization up to that contact.
Okay. So you potentially got, I don't know, tens, possibly up to 100 meters of kind of additional mineralization above the top of that nice high grade block.
Yes.
Yeah, gotcha. And at depth, there's no indications that it's dying out. In fact, possibly to the contrary.
Yeah, it seems to be. The grade seems to be picking up actually at John's. We always say that exploration geologists, but in this case, it seems to be true.
To the sections to the north, and you can see how pervasive this system is. And you can see we've got an intersection below the block model shown in purple shading. All of this is open at depth. 8 meters of 5 grams, within 31 meters of 2.5 grams.
On a section even further north, Steve, I think you drilled in 2017. Is it Waldegrave or Waldgrave? You drilled 70 grams over 9 meters or something.
That was a hole drilled in 2012 by Meridian in the Wards Gulch area. In 2017, we offset that at about the same elevation. We hit the structure, but the grades weren't. We didn't hit those kind of grades.
Okay.
And we haven't gone back in there because we want to really understand what's controlling those grades like that, because the holes are expensive and we don't want to just go in there and start drilling all around it. That gets to be expensive. So to that end, we're contracting a structural geologist to come in and help us understand the controls on the high grade leach.
And you're seeing kind of polyphase kind of mineralizing events up the structure, brecciation, fracturing, kind of
multiple phases. When you look at the drill core, you can see in some cases you can see 6 or 7 cross-cutting events. The higher grade, that as Hugh's pointed out a couple of times, you have broad intervals of lower grade, and within those you have these narrower high grade zones, and those narrower high grade zones appear to be younger than the broader zones. And so there's multiple events in here.
Nice big system, big and juicy.
Very strong.
Merlin, this is a lot of similarities between this project from an orientation and from a processing point of view to what we see at the Kittle operation in Finland that Agnico's running. And these bonanza style grades that, like this very high grade intercept at Ward's Gulch is not unlike what you see in a very similar system at Fosterville, right? Where you've got a broad lower grade, and then they got into these higher grades. We just don't know what we're going to find at depth. We've only drilled this thing down at 600 meters depth. There's lots more potential. The Joss area, we're only talking about 350 meters deep. And with these kinds of grades, it will carry on. We just got to put the drill holes into it. And that's what starts next week, I believe.
That segues neatly into the plan for the year. Hugh, kind of give us the headline elements that we could be looking out for.
So drilling. But at the same time, we're also doing engineering studies in preparation for a PFS. Of course, we want to take that heap leach project through to PFS, and that will kickstart our re-permitting of the site as we nail down the footprint of the plan. And of course, we're doing a bunch of supplemental baseline work as well this season. So a lot of work streams going on that will dovetail into 2023 when we have more definition around the project, the economics, and the path forward for construction. We've got about 9.1 million of cash, so we've got lots of cash to work with. We've got the team in place, and really excited about the season ahead.
Hugh, thank you. That's great. Yeah. So if the PFS is coming out at the end of the year, it's a drilling fest until then. Good. And very strange markets. The whole GDX, the whole gold space has just taken a massive beating, and yet the gold price is still bouncing around between 1,800 and 1,900. I think it was 1845 just before we started this interview. And the Revival share price is down 20% from its high, from its March high, and it's at 56 cents now. Just your comments on the market as in general would be quite interesting.
Yeah, it is a tough market, but I think those companies that are financed and that are working in good locations in the world will persevere. And one of the attractions of this project is we've got people who are local to the town and to the country we're working in. We don't have to worry about flying people in from all over the place. And they have the professional skills to take this project forward. We've got the capital to do it. So yes, choppy times in the junior sector right now. I actually think this is opportunity for companies like us that are in a strong position with a strong team and with a cash balance, 40% institutional shareholder ownership. That gives us an opportunity to look around and see what might else be out there for this team to take on. I think it spells opportunity both in terms of our program and our ability to attract people, but also our opportunity to bring in inorganic opportunities for our shareholders. So it's a tough time, but it's one to position. It's a time to make hay, I think, in this business.
Well, on that note, I think I'll say thank you very much to you and to the team. John, Steve, a pleasure talking to you, and I look forward to catching up during the year to come.
Great.
Thank you, Merlin.
It's a pleasure.